Hi, I'm Shirley from ESPC Mortgages and I'm here today to help you prepare for a mortgage application. To help you prepare for a mortgage application, it's a great idea to actually prepare your documentation in advance. So, things like your passport, in date with the correct name, fantastic idea. If you have a driving licence, again, correct name, correct address and it being in date. Super to identify you. The other piece of documentation that you require is proof of address. So things like bank statements, super for identifying you and your address. So bank statements, any credit commitments that you have, having the correct name, correct address, you're getting the theme here, are super ideas. Having credit registered at an address that you do not reside at makes lenders a little bit suspicious. So it is great to have all of these things in line. Credit is obviously registered on your credit report, and a lender uses a credit report like a financial CV. They look at it to see if you can handle credit. So having that credit in the correct name, correct address, is a super way to pick you up on that credit report and see whether you can handle credit. Check your own credit report. Checking this with various agencies is also a good idea because lenders use a variety of credit agencies. If there's something that's incorrect on your credit report, take it up with the credit provider and the agency that's provided you with that information. Keep payments up to date. It goes without saying, if you've missed a payment, a mortgage lender is going to wonder how you're going to pay a mortgage. So they're looking to make sure that you can keep your payments up to date, that you've got a good financial history, that you're reliable. And this is how they do it, by checking your credit report. So keep your payments up to date. No credit isn't necessarily good credit, and by that what I mean is if a mortgage lender can't see how you're conducting yourself with the credit commitments that you have, they don't know whether you can manage credit. So as such, if you take out a small credit card, pay it off each month, set up a direct debit to have that paid off each month, that's a great idea. It builds up your credit experience and shows that you can be responsible with credit. No credit isn't necessarily good credit, but on the flip side of that, too much available credit isn't a good idea. So cards with big credit limits shows that you have a lot of money available to you, and lenders don't like that either. So, one or two credit cards with a low limit and that you keep well within is a really good idea. If you have an overdraft facility as part of your bank account, try and keep out of this, especially on the run-up to a mortgage application. Mortgage lenders see the use of an overdraft facility as lack of resilience. If you can't keep out of your overdraft facility prior to a mortgage, how are you going to manage with a mortgage? All mortgage lenders differ in their criteria. And as such, I would highly recommend getting in touch with the ESPC Mortgages. We can help guide you through the mortgage application process and hold your hand for the journey.